Where are the opportunities?
Yeah, so we obviously have had a pretty healthy equity market return so far year to date of about 9%. And we do see a lot of opportunities out there and more opportunities being created by this big rotation. So I think that's the thing to focus on in equity markets. We obviously have value up in the 15+% for the year and growth only up a couple of percent. That's after 14 years of growth delivering 300% more than value. But we are at the beginning of this rotation, could last for a while, and therein we see some opportunities. We want to stick with the secular winners. I can talk more about why we continue to like tech, but we're also trying to be sensitive to that rotation and own some cyclicality in portfolios too.
Do you think the action of the last few days, the price action of the last few days, is going to accelerate this process?
Yeah, I think what you're seeing, again, first of all, people should be, it's good news. So when you think about what does this mean for investors, this rotation, it's actually good news because generally peaks of markets are associated with very narrow participation. And we're actually seeing the opposite now. We're seeing very broad participation, and that's a good signal for equity markets overall. And then as it comes to tech specifically and some of the more innovative companies in public markets, I would say the future's on sale. And that can be a really exciting thing. We do think tech will perform for here. Two quick reasons. The first is that all the fundamentals coming out from the earnings suggest that actually they're doing quite well, and we're getting very good looks into the future from management teams feeling pretty good about the operating environment. And the second point I would make on tech is that it's great that the real economy is doing better. And as those companies do better and business improves, one of the first things they're going to do, and we know that from speaking to the chief information officers at those companies, is go out and spend money on tech. Digital transformation, cybersecurity, moving workloads to the cloud, all of those things are going to continue to happen, and they're going to benefit tech. So the future's on sale as it relates to tech and a lot of other spaces that are geared to innovation.
Yeah, so what are some of the other sectors or names that are on sale right now? And I guess the other question to that is, what are you selling to then buy those names?
Yeah, so the way that we think about this kind of broadly is that we do believe in innovation and disruptive innovation, and we want to get our clients on the right side of that. We think about the future of the consumer. We think the healthcare market's going to be radically changed over the next 10 years by technology, especially genomics. And we're very big believers in the transformation to a more sustainable planet. And so we like all of those themes, and we're working hard to get our clients' capital on the right side of those. At the same time, we don't want to get run over by this cycle. And so how do we pull that together? We need two things. The first is we need some patience for investors, because investing in innovation is a tough thing to be mark to market daily. So you really need to look through this short-term noise. And the second thing is we are actively adding some cyclicality to the portfolio from cash positions and from trimming some of our winners, but those cyclical names should be tied to great secular outcomes. So for example, you can find stuff in the mining space like copper that's connected to the transition to a green economy. In the healthcare space, you can buy some medical device companies. They're more cyclical, but they're tied to the future of robotic surgery. So if you're very selective through active management, you can actually build a portfolio that gets your clients on the right side of disruption, but you have a valuation discipline and you add some cyclicality, you should be able to navigate this environment.